All right, so we're back to steady price action after I took a little break for the holidays, and let's get started. Here's the news drivers for the week. Today we had new home sales at 10 a.m. All right, so starting on my institutional chart, let's see if anything has changed here. Okay, all right. Give me 1 second. I'll just take the fib off for now. Okay. So my current idea has been and has continued to have been that this is an order block back here, because after this order block, we saw this aggressive expansion to the downside. So I mapped out this order block here, and you can see that price wicked above it, but then aggressively reacted, and we'll see that on a lower time frame. I guess not so aggressive, but to summarize what I'm saying, we see price respecting equilibrium with the volume of the candle on the monthly. Ultimately, until we see reason to be a seller, we'd be expecting higher prices, but we are also above relative equal highs here, and we'll frame that again in just a moment. Keep that in mind. That's my monthly bias for the NASDAQ. All right, so on the weekly, let's see if we can confirm that idea. Consolidation before this large expansion. This expansion creates these liquidity voids where price is offered on one side of the market and it's inefficient. So what we've seen in this range, we clear these stops here, we also clear these monthly lows, and we trade here. And after that, smart money consolidates. We see a consolidation, and then we see price break higher. Okay, it's important to note that here we have a low. Okay, to the right of it we have a higher low. If you go to the middle, we have this aggressive movement out of it, and then we return back to that. Okay, and this all happens after sell side is taken. From here, price consolidates, and this would be it's not a breaker. This breaker would be stops taken. That's right. So this would be a mitigation block in the form of weakness here. We have this high, aggressively traded above, returns to that, and then we see the shift in structure. Now returning to this order block, and we can see that price consolidates here, or for now it has, but we still don't have any indication that price won't go for these highs, or that the market will continue to see higher prices, right? We ultimately don't 100% know where price will go. We're just thinking in terms of probabilities. Now, you have to understand, retail traders will have their stops above highs like these, above like these relative equal highs. My current idea, or the reason I'm expecting price to respect this order block, is the simple fact that we saw aggressive movement to the downside. All right, then within that range from this high to this low, we see price trade out of that and trade below these monthly lows, below these clean monthly lows. In other words, they want to pair their short positions down here with those who would be willing to buy them. And so that's why we see this reaction of price moving up. But again, this is external liquidity. It's outside of our range from this high to this low. From this, you can see it tapped twice here and here, just creating these relative equal lows. And bear in mind, each of these represents a week. But my point is external liquidity returning to a previous institutional level of selling, okay, And we know that markets move from external range liquidity to internal range liquidity and back to external range liquidity. All right, so let's see if it's any different for ES, because it is a little bit different. Start again on the monthly. All right. Here's our order block. Here's price trading to precisely equilibrium. And then we have this range. All right. And then from this high and this low, anything above that is external range. And so we are in the internal range of liquidity on the monthly. We are in this impulse swing. You're still within that range. Let's go to the weekly. All right. So here we are on the weekly chart. All right. It's the same exact concept of what I was just explaining previously. This high to this low after this consolidation, aggressive movement to the downside. We see these different liquidity voids where price is only offered on the sell side. See price look to rebalance those, not completely. Continue lower to run stops. We have this external range liquidity here where we trade outside of the range. And after we trade outside of the range, we see price start targeting these buy stops. And we see that from a level of consolidation. All right, right here. Now we are seeing price move higher. But here on the weekly, we still have this high. We have this high. Okay, these highs haven't been necessarily taken out here. Let me also look at this as well, because we will. Ooh, I didn't mean to move that. Let's see if this is a rejection block. So we have a major to intermediate term downtrend here, and then this is a intermediate term uptrend. It took about 2 weeks to form. Then we have this high form. All right. Now, this also takes these stops out here. Okay. And then we see that aggressive movement, the downside. Now, this candle's close comes in at 4539. This candle's open is below it. So this is a swing high, lower high to the left and right. We also have this wick here, and price was simply trading to this downside range, trading above these highs. And we see price has respected that, but also we have that in correlation with an order block. So when price trades the rejection block, you see aggressive movement to the sell side. Price returns to the up close before the down move. Internal range liquidity. It also creates this low. External range liquidity. Price proceeds to break lower, breaking below another low here from a consolidation. So we have a consolidation here. Price expands to the downside, and now we see price trading to these different voids here, or these aggressive movements to the downside, where price is only traded on one side of the market, and we are now returning to that order block. But there's also buy stops above these highs. See, when price comes up here, retail will see this old high as a level of resistance, meaning that price, they'll believe that price is going to come here and it's not going to go higher. If it does break out of that, it's going to be smart money accumulation. They're going to start accumulating their short positions, which we know can take a while. But we also have to keep in mind these highs here. So overall, what's the point I'm making? Well, it's the very same thing as I mentioned before. We are currently expecting price to trade higher. Now, if we look at this range that we have, we are at a level of external range liquidity. Okay. Additionally, price has came from this rejection block. Okay. Additionally, here we are at this order block. So we'd be looking for indication that price wants to move lower. That's it. Okay, just combining a few concepts I've learned, vocalizing that to deepen my understanding, as ranty as it may seem. All right. So how about NQ and ES for the daily chart? Let's go ahead and see if those ideas correlate. So we know on the monthly and weekly that we are expecting higher prices until we see a reason lower. So what can we, subtract here? What can we take away from this? Well, let me move this here instead to actual bodies. Here we have this high that formed. We have this right here, and we see price consolidating. So what we're ultimately seeing is price trading above clean highs, untested highs, to pair their long positions down here to people who would be willing to buy those short positions at a higher price or in a premium. Okay, so we see price consolidating. We know that these market makers and these large institutions, they can't put their orders in all at once. They have to accumulate them, and they accumulate them above relative equal highs, such as this high, this high, and this high. Now, their run from here to here would be considered high resistance, as we had to trade above this high, and this high. And we see that from here, we can see that when price eventually trades to it, trades above it with the wicks of the candle trading above the body, we have this reaction lower. We have this up close candle as well, which we know that these up close candles in a down move will support price. Now we have this order block here as well, and price aggressively trades through that. Now previously, I believed, okay, price will, trade to this order block and continue lower. What was the mindset there? Well, it's true that price can trade to an order block and go lower. And it's also true that we don't always know where the market would go. The issue with the logic is if we look to the left side here, we still have buy stops above here, still have buy stops above here, and I didn't take those levels into account. So, in other words, I said, oh, we're at an order block. I disregard these highs. I also disregarded this, which would be considered a vacuum block, which is refined on a lower time frame, which I'll show in a moment. But we also have that here. Okay. So, and for this, price has traded above all of these old highs or untested highs and is now consolidating. But keep in mind, this is also high resistance. Okay, that's why ultimately I need an indication that price will break lower, because if we look back here, we can see the consolidation, and we can see that there's still these highs back here. So these highs are relevant because there's buy side liquidity above them. Okay, and when price breaks out of that, that would trip buyers into the market, thinking that price will continue, or it will be a continuation higher. But it's also the same idea here. This is how price is engineering liquidity. It's trading above this high, and we'll see what it wants to do on that. But it's the same thing. Higher prices until price shows an indication that it wants to break lower, to which we would frame an idea of exactly where it wants to break to. Is it any different for ES? Well, on ES we have it mapped out. Okay, so this is more refined on the 4 hour, just so you know, even though we can see the actual wicks have traded, through each other, there is a gap on a lower time frame. So this would be a vacuum block, and so ultimately price is going to want to return to that vacuum block, as in, it will attract price. Since we're above these relative equal highs, it's possible that we see a retracement lower, or that price doesn't trade there just yet. Ultimately, we are expecting price to move to that eventually. Now let's see if what I was saying is true there. Is there really a gap? Oops. Okay. There it is, clear as day. From the close of this candle to the close of this candle, there is a gap. So this candle's low is at 4597.50, while this candle's high is at 4593.50. We have not seen price trade to that. We haven't seen it. It just hasn't happened. But now we're closer than ever. Now, we don't want to get caught up on the daily, because the daily is the most dynamic time frame, and we should understand that. However, we are going to keep in mind where we are in price action, and this is a level of buy side liquidity here. So when looking at this, yes, we are on higher time frames. We can see this as accumulation. Why is price drawing down here? Well, let's look no further than this expansion. Last down close before the expansion above the upside, which took out these highs back here, in other words, buy stops. Okay, smart money is able to close their long positions above this high. We see price trade to a prior level of institutional buying, exactly, and then we see aggressive movement here to the upside. So now we have these clean highs, which has retail traders thinking, oh yeah, well, we've seen how aggressive price, has been. It's been so aggressive. It can't go higher. There's no way it's going to go higher. You know what I mean? This is showing support right here. There's no reason it will go higher, right? So let's go here. Let's do the same thing. Start on a daily. Don't worry, I'll go to the weekly as well. Same thing. Consolidation at a higher time frame order block. Okay, so let's see what's really happening here. 4 hour. Why is price doing this? In fact, this is actually showing accumulation here on this one, because if you notice, ES is showing weakness. Okay, it's showing a willingness to saying, no, I'm not going to go down there. I'm not going to take those stops just yet. But we have this order block, so price does trade to that order block and continues higher. On NQ, however, we trade below that low. So what does that show us? Well, that shows accumulation of long positions, because smart money is going to look to buy at an old low. And we see that here. And it's further proven by the fact that price has an aggressive run then to the buy side. So now we know why price traded down there. Did we see an aggressive run below this low? No. Sure, we saw an aggressive run below this low, but it's only trading down here to take these stops or retail resistance or retail support. Okay, so this is the price floor. The idea that retail traders, or retail-minded traders, I should say, won't expect price to continue lower. Now, it's important to mention that we are at that order block. So this is also an order block here, and I mean we're at that monthly order block. This is another order block, the last that closed before that aggressive down move. You see price trade to that, but price actually trades through that, takes the buy stops here. After it takes those buy stops, that's why we're now seeing price go lower. Ultimately, we would need an aggressive run to provide indication, an aggressive run below an old low, because this is just taking stops. We need something like this, energetic candles, okay? I know price is just taking stops. I know price is just trading to an order block. It's not a reason to be a seller. If I wanted to buy, this would be a great buy, expecting price to draw to here, which it then would have happened, and here. Okay. Price even on here, and granted, because I'm expecting higher prices, I wouldn't do this, but just to talk about it, okay. Price returning then from that low, below those lows, to this order block, okay. We can look for some measure of retracement because price has returned to a previous institutional level of selling. We're also in a higher time frame order block, so we're paying attention to these lows. We're seeing if price is going to show an aggressive run, and the reason why we are looking for an aggressive run is because smart money, okay, these traders that actually move price, these large banks, okay, they're the liquidity providers, and so therefore they have the money to push price down there. If we see that, okay, that's going to be an indication of institutional sponsorship, okay, and then we would look at, other different levels, such as where price was only offered to the buy side here. We did trade back to it, but we left this open. Additionally, this is an order block, so we saw price trade within that order block. It traded within the wick, or did it trade to that high? So here's the low. The low of the candle comes in at 15912 even. The close is lower here, but the high is 15940. So price returns to that order block before continuing higher, but it returns to the wick. It doesn't trade to the actual body. Creates these relative equal lows, takes out those lows, moves back to the buy side. Okay, so now that we've done that for the 4 hour, how about the 1 hour? Let's look at the weekly range. Let's look at last week's range. What do we see? Well, in previous weeks, we've watched price have these aggressive runs to the buy side. Last week, we had a slightly aggressive run, took out these highs, took out those highs on Monday aggressively. Okay. So, Monday of the week prior to that, we had the consolidation and aggressive movement after. So, we're seeing aggressive movement on Tuesday and Monday, all the way from down here. So I'm noting that as well. This actually happened on Wednesday. But we're seeing that aggressive movement at the beginning of the week. That's what I'm... Oh, that is one of those levels that... Let me delete that real quick if I can get it. Yeah. Alright, there we go. Alright. Now, we have clean lows here. Okay. We have a break below this low, but it's not an aggressive break. It's a break for the sell stops. And we have this range bound or sideways price action where the market is accumulating on both sides. Okay, people have their, even large institutions have their stops down here. Okay, because these large funds aren't worried about, retail stops. Okay, they're worried about, these large funds and where they place their stops. And that's going to be down here at these old lows. It's going to be at these old highs. We just took a level of sell side. Sure, we're seeing a retracement. We're seeing a retracement because we had this liquidity void down here because of an aggressive run to the upside, which we saw today. We're seeing price trade to that. And if we see an aggressive break lower tomorrow, we can definitely view that as a shift in market structure. But for now, it is the same thing I've been talking about on higher time frames. There's no reason to expect price to trade lower. We know why it's going lower. Here we go. On the 1 hour, it actually trades to the order block right here. Okay, these consecutive down close candles form one order block. We trade exactly to it. Price reacts afterwards. Very interesting. These large wicks just kind of whipsawing back and forth, even though there's only a medium impact news driver. But price seems to have resisted the temptation to move to these highs, knowing that retail is now seeing price move here. Like, think of this as a retail trader. Listen. Oh, here we go. Yeah, price tapped it once. It creates this high. Yeah, okay. Oh, here's another high, and then it rejects another high. It rejects after that. Okay, another high, and it aggressively rejects. Yes, that means that price is finally gonna go lower. You know, we got the high based on my indicator. We really got it, and we then see price aggressively trade lower. They would place their stop above this old high. Yeah, my stop is going to be safe up here. This is a level of resistance. Price is going to resist off of this level and just continue straight lower. Oh, look, it's a downtrend. Yes, yes. Now, like I said, we have higher. I'm being a little dramatic, but listen, we have those higher time frame objectives, so it could happen. Okay, not to shit on like retail traders or anything like that, but more or less the mentality, right? Like, oh, I'm gonna put my stop here just because it's an old high, an untested high, right? Obviously, the undertone of the market is bullish, and we haven't really had an indication of it going lower, besides when it's going lower to previous levels of or previous institutional reference points. Okay. So on to the 15-minute now. And I haven't done it for the NASDAQ, but you know what? This is probably a longer video anyways, so let me go ahead and finish this up and I'll do it on the video. So right now, I am delineating the last 2 days, so I can map out the highs here and here, and then we'll take note of the daily range as well, or how prices have been moving, and just noting the daily highs and lows. It's about the same. And for some reason last Thursday, and I'm not sure if this is because of Thanksgiving. In fact, let's go see. But last Thursday we'll do it first. So last Thursday there was no news drivers, but we had this really like just sideways range bound price action. I'm not sure if that's because Thanksgiving is a federal holiday, but I'm just keeping that in mind. Okay. Now, ultimately, what do we need to do here? Well, we need to take note of untested highs and lows. That's what we have here. That's what we have here. There's relative lows here. Okay, we have this high here, which actually was tested. We just took a level of buy side. Price is now moving lower. We also have this consolidation here, and we have this last down close before this aggressive up move. So that's an order block as well. See price trade to equilibrium on that, and we'll see if price wants to target these lows here, because this could also be considered a retail double bottom. Okay, but we also have these lows back here, so we're keeping those in mind. Those are noted. Friday, at the end of the week, price was pushed down here, okay, to close below these prior lows back here from Wednesday, to take sell side, in other words. This trade below these bodies is a form of external range liquidity. Where did this high go? Why did this high form right here? Well, yes, we have those buy stops, so that is an external That's external liquidity as well. But additionally, it's not fully external. It just took out those old highs and the move lower. Prior to this sideways price action on Thanksgiving, we have this last up close here. Let me try to find it more. Okay, there we go. This last up close, which comes in, I get to love that up close, 16079. The open of this bearish candle is 16088. So it trades to the order block, and then we see that aggressive movement lower. What are we targeting now? Well, we have this void here, we have this imbalance here, we have this fair value gap here, right? There's no pass through, nothing like that. We can reasonably expect price to trade back to that. We have a consolidation before that up move, so we can also look for price to trade to that order block, since we did technically trade to a level of external liquidity. And again, we're gonna continue looking for higher prices until we see a reason otherwise. I noted here this retail double bottoms, which are refined on a 5-minute chart. Double bottoms here, I noted those. I noted this old high as a level of buy side as well, taking that into consideration. All right. So, to clarify on everything, I'm going to continue expecting higher prices. If I'm going to be entering on this price action, I'm going to be anticipating price to run below an old low, only to accumulate new long positions in the marketplace and run out old untested highs. When I see an aggressive break below an old low and a return to the order block before that aggressive down move, I would then have a condition of a market structure shift where I could then see the return to that order block as an opportunity to sell short. For now, we don't have anything like that. So I'm going to close it off at that. Oh, sorry, one last thing. Let's go back to the institutional chart and let's see how I can use the study for the US dollar index and interest rates to understand my ideas better and understand what price is doing. All right. So on the US dollar index, and let's go to the 90-minute because that's where I was studying it. Okay, here we go. All right. So from the US dollar index, we have these relative highs back here. Okay. We also have this order block, which I don't know why I marked as sell side. This is actually an order block. Let me fix that real quick. Order block minus bottom. Okay. All right. So we have this order block, and price actually trades through that. In the same way that I was saying on, the futures market, how I saw these relative equal highs, it would be relative equal highs since these are diametrically opposed to the NASDAQ and ES. But I was saying how I was expecting price to trade here and go lower, but there's these relative equal lows. Price on the US dollar index targets those. Okay. Do we have any other levels of liquidity to really refer to here? Not necessarily. I mean, we have this previous high. We're trading below this low. In fact, we gapped lower here. But to clarify the idea, okay, it's the same exact thing here. At least, looking at our sample for the last 18 days, all I see is the US dollar trading below relative equal lows, and so now I know to expect some form of retracement. Whether that's to this high, this high, this high, I don't know. This high even, I don't know. Okay. All I know is we are below those relative equal lows. That's external liquidity. smart money will be accumulating long positions below those lows to push price higher. Can we match that idea here in the futures? So we have our long-term perspective here. We're on the 30-year. From this high to this lower high, okay, that's what we see. We see a lower high. Price is refusing to, at least as of now, it is showing weakness to come up here. And why is it showing weakness? Well, for this aggressive down movement, we have this consolidation here. Price trades to the halfway point almost precisely of that last up close candle before the down move. Do we still have levels of buy side here? Well, we have it in the form of this high and this high back here. Yes, but ultimately we're showing weakness. It's the same idea of wanting to see an aggressive break below an old low. So what do we see here on the 5-year? Or sorry, the 10-year, because it's a little bit different. We see price actually ran out these highs. So, in other words, diametrically opposed to the US dollar, we trade below relative equal lows. Here we're trading above these relative equal highs. This indicates accumulation of short positions above an old high. Also, we have this consolidation. Okay, these up close candles. This, since we're on a 90-minute, from here to here, on a higher time frame, this would be an order block. Okay, we trade to about the halfway point. Let's actually pull out the fib and measure it. We trade to exactly equilibrium within that range, slightly above, and now we're seeing an aggressive break lower. Seeing accumulation above an old high, and we're seeing price trade lower. We're also seeing that on the 5-year. So we have our intermediate term perspective here, our short term perspective here, and diametrically opposed, we have our US dollar perspective. These should move almost in correlation. I mean, not exactly, right? But these should move very similar to our futures. Okay. So here we are on NQ. We can see even though it's just the wick aggressively trades above these bodies and takes the buy stops here. Afterwards, we see aggressive movement to the downside. All right. How about here on the 90-minute for ES? In fact, let's just do this, okay? All right. So, honestly, I'm going to be completely honest. This is a little bit more choppy. All right. But what I will say, we had this consolidation and then these relative equal highs. We had a false break above those highs, okay, which would trick retail into thinking that price would go higher. Price does the opposite. It aggressively breaks lower. Look at the last up close candle before that down move. It's right here. Price trades to that order block, and we see this aggressive movement down lower. Now we can't get tripped up on the 90-minute because ultimately this is just a reflection of what I've been saying before. Sure, we see a shift in market structure here, but we have higher time frame objectives to frame that idea around. So, in my next video, I will vocalize what I've learned through month 4. Yes, I just finished month 4, and even though I did not post the last couple of days, my momentum is not stopping. This shit feels fucking great, okay? And I am starting to really feel like addicted, to the results. And I'm ready to stop fucking around, stop wasting my time at some job I hate, and pursue some meaningful shit, some shit that actually matters to me. So I'm going to leave it off at that, and peace.